Good morning, everyone. Anthony Crudele here, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group's event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, copper, and now they've added Bitcoin futures. Today, we have a great show for you. It's just going to be me. And as a longtime futures trader, I rarely used options on futures. It really had to be in a certain situation for me to use them. And since the launch of CME Group's event contracts, which are really the true zero DTEs, I've been using them on certain instances and I've had some good success trading them. I think they're a great additional tool for veteran traders and really an excellent tool for new traders to learn about using futures and options. And in today's show, I will show you one of my favorite ways to use daily options using CME Group's event contracts. Today's broadcast is brought to you by Tradovates, which has built a custom app dedicated to trading CME Group's event contracts, and they now have it on their regular platform in an options chain, and you can trade it right there in the dome, the depth of market, which I'll be showcasing in today's show. And I want to hear from all of you in the chat. So please take a moment and maybe let me know what part of the country you're from. How's the weather out there across the U.S.? Of course, it's beautiful here in South Florida. I also have my golf shirt on because I might be venturing off to play golf after this show today. Now, I'm going to get right into it. Let's pull up the page. Well, here I am live. I'm not actually going to click that and play that right now, but let's go over to these quant stats. Now, these quant stats are really, really important in my decision making when choosing when to trade a daily option. Now, we've done a whole show that Julia Cordova has done explaining what these quant stats are, and they're really a gap strategy. If you want to watch that video, you can click on this question mark right here on our site, and it'll go over in detail what the quant stats are. But really, they're a gap strategy. If we gap down, are we going to potentially go up and fill the gap? Are we going to close higher? If we gap up, is it going to be a gap and go? And that's really what they are. And what they are is giving you is a percentage of whether or not the probability of closing above the open at the end of the day is. So I'm starting off with gold today. That's GC. And when you look at GC, it says if we gap up, which we did today, it's a 53.28% probability of closing above the open at the end of the day. Well, that's pretty good with a 1.11 profit factor. Now, first thing I'm going to do is I'm going to take a note and I'm going to say gold says probably bullish. We did gap up this morning. Keep a note on that. The other markets I'm using these a lot for, I'm using them for natural gas sometimes, some crude oil. So I'm actually going to go to crude oil today. And crude oil is gapping down. And crude oil is one of those markets where when it's trending up or it's trending down and it's ripping, I really like to use the event contracts because you get a lot of trend days in crude oil. And when that sucker starts trending, it's just a beast, right? And so sometimes it's better than just going into the futures or even the micros. So I look at it today and we gap down. What was interesting to me is only a 51.8% probability of closing above the open at the end of the day and a 0.78 profit factor. So this is really a bearish stat. If crude oil comes in lower, which it did, it gapped down. Globex open gapped down, and I don't even think they filled it. And so it's just been weak all night. And what's interesting is that crude oil has been kind of bullish lately, right? Obviously, it had some weak days coming into today, but overall, it's had quite a run. And you see weakness on the quant stats. So right away, I write down oil equals bearish, 0.78 profit factor, 51% of potentially closing above that open. It's basically a 50-50 with a weak profit factor. It's really kind of smells bearish to me. Then we go to the S&P, and I love to see what they are for the S&P. Now, primarily for the S&P, I'm trading the E-minis most of the time, but I like these on certain days, a day where maybe we gap down or up and it's a trend day. And it's just one of those days, and you guys could all relate. There are times where it's like, man, I step in here and I just want to be long, but I can't participate because this sucker just keeps grinding up or it's grinding down. And it just kind of drives you crazy because you can't get in. And that's when I like the event contracts for. For me and many of you, you're probably E-mini traders or micro traders. This is a great additional tool to use. And with these quant stats, it really gives you an idea if it can be a trend up day or a trend down day. And so right away when I come in today, the S&P gapped down, right? And it had a 55.5% chance of going up after the gap down. that it would close above that price. Well, that means it's 45% chance that it doesn't. So that's pretty good on a gap down in a somewhat bullish market of S&P, right? I mean, I say somewhat bullish because we've just really kind of been rangy to up. And so I like that in a gap down to say, you know what, write my note, S&P probably a little bit bullish, which I had. And I'll take a look at the NASDAQ as well. And the NASDAQ quant stat this morning was if we gap down 1.1 profit factor and a 53.93. So bullish, but not as bullish as the S&P with 55. So I say I like the S&P a little bit more for that. So that's the first thing that I think that you do when you're looking at whether or not you're going to trade a daily option is come in and get some real information, right? And decide if it fits in to your scheme for the day to potentially take a trade with these. Then I'm going to go to the charts and I'm going to do a little bit of charting with you and I'm going to go over some basic things that I like to look at. Actually, I was looking at this earlier. And so one thing that I like to do to get a sense of whether we're going to be a trend day or just kind of get a gauge of what the market is. And I'm actually on TradingView and we obviously talk about Tradeovate all the time on this show as a sponsor, but you can go to the trading panel and you could actually connect your Tradeovate account to TradingView, which is pretty cool because I do a lot of my charting here and I'm going to go to the Tradeovate platform as well. And what I did was I actually took this tool and it's just a volume profile from the low here to the high there. And all it is I boxed it out. And I like to look at what is the high volume bar and really the point of control, especially when you're making a bell curve on the top part of this range here in gold. I've been really keeping an eye on this in all these markets because when you see that volume build, you want to see that it potentially holds above it. And then I put a simple 10-day moving average in there to see where are we relative in this recent range. So when I look at that, I say, okay, look at gold. Just keeps yesterday. It had that weakness. It broke down. It held that point of control, the high volume bar from this recent range. It's really right at the 10-day moving average. I look at it and say, intraday, let's see what it looks like. And I'll pull up a 3-minute chart. And this is what I look at. And what I do here is, and this is really one of my favorite things to look at, is I take a 3-minute bar, okay, and I put it to the 8 a.m. time frame. That's kind of when really gold starts to get active. We don't have the pit hours anymore, so I like to look at it from 8 a.m. Until it closes, I think around 1:30 Eastern time, something like that. And what I'll do is I'll pin a 3-minute, I'll take a 3-minute bar and I'll take my horizontal lines and I'll draw a horizontal line to the high and low of that bar. And I'll go, okay, that's when the volume starts to pick up and I have my VWAP. And now I have my VWAP and today we had obviously 830 data points. And so the market just went really, it had a pretty decent rally, came back up. And I like to look to see, is the VWAP going to hold above or below that opening 3-minute range and show a potential build in volume weighted average price above that range? And then that would confirm to me kind of with the quant stats that maybe it could be a trend up day. Obviously, data today, I look at this chart and it's like, who wants to step in and trade this bad boy? Not really me, because it's kind of just all over the place, right? It's just coming back to where they opened, back to where the 830 number was. And I looked at it and go, maybe it's not a bad day to take a look at what's going on with an event contract if I want to step in and be long. So this is a time where you look at it and you say the conditions don't truly support really that easy of a day trade. And then you go over to what we have here, and I have the PYT dashboard up. So now on this PYT dashboard, which you can go and download, or really we should have this on our site somewhere, I think, where you can go and get it for Tradeovate. And I have all of the event contracts up here, so you can go in and trade them right here in the dome, and that's what we're going to do today. Let's go to the S&P and see where those are. What I wanted to show you in gold is the same thing I'm going to show you in S&P. Look at the strikes. I'm not going to take any strikes in gold because I didn't like the day, but I'm going to go back to the S&P now. When we look at the chart in the S&P, first thing that we're going to do is we're going to go back to the daily. And when we look at the daily, I'm going to take that order flow, not order flow VWAP. I'm going to get to that on the short term. I'm going to take the volume profile from this high through this low and all the way through here. And I'm going to look to see where that point of control is. And I talked about this actually this past weekend. And I said this 4143 area is huge because that's where that volume build is. And if the bulls are going to continue to hold above that, I think that we could potentially try and continue to push higher. And so very similar to what I was looking at in gold, same type of scenario. I like to do this in all my daily charts. And if you remember, we put that note, ES equals bullish. So therefore, when we get there, I want to take a look at the bullish, see if it confirms with the daily and potentially the short term. Okay. So I feel that right now above the 10-day moving average, we gap down, good gap stats. Let me go to a 3 minute chart and I do that same exact thing I did on gold. Now, this is one that I like to see. You have a 3-minute opening range. A lot of people like PAX uses 30 seconds. Some people will use 30 minutes. I think Horse uses 30 minutes. Some guys will look at the first hour. I like the 3-minute opening range. And what do? I'm going to remove the moving average because I don't need to see that now. I take a horizontal line and draw to the high and low of the 3-minute opening range. Okay. From there, I have this order flow VWAP, and it's just a volume weighted average price, and I anchor it right to that 3-minute opening bar. So it represents where we are for the day. Where are we for the day? We looked at the daily. The daily was a little bullish. Overnight, we held that point of control, that high volume bar. The quant stats came in and they said if the S&P gaps down, it's a bullish look. So 1 + 1 maybe equals 2 in this instance, right? Look at the short-term chart. If we start to see the volume weighted average price that I anchored from the opening 3-minute bar gets above that 3-minute opening range high, that tells me that the volume weighted average price is building above the opening 3-minute high. Now, why do I look at the opening 3-minute? The reason why is because I actually talked about this in Develop Your Edge a lot. I talked about it actually this morning as well. Think about it from a boxing match. Think about it from a soccer match. Think about it from a hockey game. When that adrenaline comes in that first 2-3 minutes of a fight, right? Where they come out and they go out and they hit each other, and that's when their adrenaline is the highest, right? Just like the open, that bell rings, we're ready to roll. Now, think about it from the perspective of the market with the volume. The bulls, the bears, everybody's stepping in. A lot of people have to do stuff on the open based upon the overnight. So you get a surge of volume and you get a fight right then and there. And I like to look at that opening 3 minutes as the opening bell, the opening range. And at that point, you see who took the hit, right? Did the volume push to the upside? Did it push to the downside? Where are we relative to that opening 3 minutes? And if you build above that opening 3-minute high or build below that opening 3-minute low and that VWAP crosses it, that is very interesting because now it's telling you that it took the hit and now you've opened the doors to potentially a trend day. Now, if that VWAP stays in between the two, a lot of times it's just a range bound day and it's kind of garbage, right? And that's when a lot of times I'll use the standard deviation lines and maybe, it's a day you don't even want to really look at event contracts because you don't really have an edge. Because now let's backtrack. When would I use a daily option, a 0 DTE, an event contract? Bullish on the quant stats. Maybe you look at some GEX flow and that maybe that's bullish. You look at your VWAP and see where is that relative to the 3-minute opening range high and low. Where are we on the daily? All of these things are lining up for a trend update now, right? So now I look at it and say 4150 is the top of the opening 3-minute range. Now let's go back to Tradeovate. And I've been working the bit here and I can't seem to get hit. What you have here now is you have your quote board here on Tradeovate. Like I said, you could download this. It's just a PYT dashboard. And what I like about this setup is once I see what strikes I like. So today I like 4150. On the left-hand side's the calls, on the right-hand side's the puts. And maybe even the 4160s, well, maybe a little bit. We'll see what happens there. What you could do is you right click like this, you click on the dome, and then you drag over to here, and it'll represent that contract right there in the dome. So you can go in there and trade them. And you can see I'll work some orders in here to show you what it looks like. And $10 is the middle price. Really, to me, that's the at the money, right? So obviously we're trading 4160-ish right now. So that's the at the money strike. And actually what I'll do is I'll actually buy a couple here. I'll try to split the bid and offer. And let's try to get hit on 5 of these here. I'm not going to buy the 10 halves. I'm going to make them come to me. But, well, maybe I have to. Let's see if I got it. So now I'm long a few. You can see it up there. I bought 3 at 1050. I'll cancel my 5 lot. I'm long a few just to show you the execution of it. You could trade these and scalp these however way you want. Now, basically, I'm long at 10.5 bucks. The max I can make is 20. It is a binary outcome to the upside and also the downside. So the 4160s are like, this is kind of, I don't want to say is more of a long shot for me because let's go back to the chart. When you look at it, 4150, that's the top of the opening 3-minute range. I think with the VWAP above it, we want to buy strikes above it. And maybe we just sit here and chop So 4150 is a strike I want to buy because I think on a trend up day with everything that I mentioned, this is a day to participate in trying to maximize my gains to the upside. And that's why I like a daily option such as an event contract, because I might not get a chance, number one, to buy 4150. I know for me personally, there's not a lot for me to do in this range. I wanted to buy off the 4143 area. We really had almost no chance of doing it. We ripped off it. And this goes back to what I said at the beginning. Sometimes as a trader, you just don't have an opportunity to step in and get in. You know that you want to be long, but you can't go back and buy them. And the difference with these daily options that maybe decay, that's probably an issue. But with an event contract, you don't have that issue. You can step back in. I'll go back to my 4150s, and I'm just working the bid between 10 and 1050, and maybe I'll buy them at 11 at the most. I'm hoping for a retest to come back down there and step in, because at that point, my risk is equal to my reward relatively. And that's better than me stepping in and buying in the future, because I just think that at this point, all I wanted to see the market do is close up on 4150. All this is to do is close above it by one tick. And if that does happen, I get paid the $10, because if I buy them at 10, everything closes at 20 or 0. And so it's just a simple way to step in and have another tool at your belt. It's not something that you need to look at, every single day. It's really about the situations. And days like today are really a perfect situation, the way that I look at it, because I like the market to go up from here, but I'm not buying a rally in this market. I want to buy a dip. I may not be able to get it. I think it's going to be a trend up day, but I don't know exactly if I'm going to get a chance to get in. So I find strikes that I like. I showed you on Tradeovate and how you can do that. And not only can you just wait for that type of trade, you can actually trade those. And I think it's a great way to learn futures. You can buy and sell in the dome. And I think it's a great way for people just to get used to even trading futures and options. And so hopefully that helped all of you today. Once again, keep things simple. Go through the process I talked about, narrow things down. I love event contracts for trend days, for choppy days. You don't want to really look at them because it's too hard to pick what the close would do. That's what I'm looking at for today. Let's see if there's anything in chat. I see everybody's chatting a little bit in there, but I'm not going to take up any more of your time on a busy day like today. Make sure you subscribe. Every morning in the newsletter, we are putting out what some of those quant stats are, Shy Girls blog, and also a whole bunch of stuff. Make sure you stay tuned to everything we've got going here at PYT. We're also going to be in Vegas this weekend. So if you're going to be at the Money Show, make sure you come see us. Got a kind of a special sport coat for Monday. Pretty excited about it. And it's going to be great to be out there with the whole PY team. So I look forward to seeing everybody out there. Make sure you follow us on Twitter, also on Instagram. I'm sure those links are somewhere on the page. That's all I've got for you guys today. Keep it simple. Go through your process. Trade well, everybody. See ya.